Welcome to Short View Trends, your morning market hit for Friday, October the 29th. What matters today for traders? Well, what a fascinating week it's been, dominated once again in many respects by quarterly earnings out of US companies. So far, 263 of the S&P 500 companies have reported their quarterly earnings in this earnings season. The vast majority beating to the upside, not too many disappointing. And indeed, as you see in the chart in front of you now, in aggregate, earnings are beating by 9% and change versus a normal beat of around 4%. So quite impressive at the top line level. But having said that, the key tech companies, many of them which have all been reporting this week, many of those key FAANG companies are disappointing. In particular, overnight we had Apple and Amazon, both disappointing on their earnings. And as you can see from the GIP charts in front of you now, the tick charts, 10-day tick charts, both those stocks down sharply overnight. And indeed reflecting those poor US tech earnings, as well as what we're seeing in bond yields. A lot of the Asian and Australasian markets are performing pretty poorly overnight. That's most obvious in Australia, where you see the ASX 200 futures are down about 1.6% in overnight trading. And indeed, if you look at this 2-year bond yield, you'll get a sense of what's going on. Dramatic moves in yields to the upside in Aussie 2-year bond yields over the last few trading sessions, particularly the past 24 hours. And indeed, that's reflecting what's going on in much of the world, although is most dramatic perhaps in Australia at the moment. US 2-year bond yields up sharply over the course of recent weeks, New Zealand as well, UK and so on. So this dramatic repricing of bonds and bond yields is impacting a lot of stocks as well, bringing a lot of pressure to bear. And all of that, of course, is happening in a market which, as we said on Monday, looks increasingly complacently priced. Look at the steepness of the VIX curve, the chart we're putting up in front of you now. This tells you there's not a lot of fear in pricing, quite the reverse, a lot of complacency if you look at the volatility curve. And with that, quite a lot of equity markets have stalled out this week. If you look in the US at the mid caps, the small caps, and the Dow Jones, they're basically flat as of Thursday's close over the course of this week. If you look over in Europe, take the DAX, the GIP chart we're putting up in front of you now. Last few trading sessions really quite poor. So the price action's changing after a very strong October up to the beginning of this week. This week's proven to be much more challenging for equity markets to continue to make those gains. So that leaves us with a key question as we articulated on Monday. Are these markets consolidating their gains, or are they in a topping out process and about to roll over? And to see how we're playing that and our view on that question, please see today's Daily Rag available to subscribers via the website. Or if you're interested in a free trial, please click on the link below, enter your name and email address, and we'll send you the Daily Rag for free for 7 trading sessions. No credit card details required. So what are we watching today? Well, there's some interesting data out of Europe. We've got Eurozone Q3 GDP and consumer price inflation. Over in the UK, we'll be watching closely mortgage approvals and mortgage lending. The housing market's been a real area of strength in the UK economy in recent months, so that data is critical. Whilst in the States is personal income and spending, and also Exxon Mobil earnings. So that's it from us. That's your morning market hit for Friday, October the 29th. Thank you for listening. Please do subscribe to these videos on YouTube. Simply search under Short View Trading and click on the subscribe button, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.